everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 1st of September 2017, and this is typically the weakest performing month of the year for the markets, but so far we started out on a good note. The NASDAQ finished at an all-time closing high for the month of August, but slipped just a little bit here today. But a great week for stocks, especially those biotechs, and I hope you listened carefully to last week's video because I was clear that I thought they were going higher. In fact, I'm going out of order because I want to talk about these biotechs and how well they've behaved in relation to the volume weighted average price levels that I've been laying out week after week here. First, we saw, of course, that earlier in the year we were holding the year-to-date volume weighted average price, and then as it slipped below that, I pointed out that I thought we were going to find buyers at the volume weighted average price since the election, prior to the election. That's exactly where we found them. After this last rally, that is once the buyers regained control, what we saw was that the volume weighted average price off the peak, we got above that this week, and that was after getting back above the volume weighted average price from that shakeout low. So at Alpha Trends, we're long in this area right in here and continue to hold that. Hopefully you got involved in it as well. It was up close to 8% this week, just a huge rally. And look at these year-to-date numbers. The NASDAQ's up 23%, semiconductors up 24%, biotech's up 26%, and oil continues to be in an area of weakness, down 17% year-to-date. Let's go back to the S&P 500 for a moment. We saw that the missiles launch really ended up being nothing but more than an opportunity to buy this market. We broke through support, and you don't throw away your stocks on the open. Instead, it turned into a buying opportunity. It did not find resistance at the prior level. It did not find resistance at that downtrend line. Instead, it just sliced right through there. And you can argue with the market all you want, but when we're back above a rising 5-day moving average and making higher highs and higher lows, the intermediate term trend is higher, and that's where we are going into next week on a 4-day week. So, you know, we're a little bit extended. Maybe we get some pullback, but again, we're in a primary uptrend. So over and over again, people have been saying all year, you know, this market is done. It broke a trend line, and as I like to point out, breaking a trend line only means that the rate of ascent has slowed down and that markets can correct through time, not just price-wise. And besides that, you've got a much bigger trend line from the low in 2016 here, and of course we're above a rising 10, 20, 30, 40-week moving average. In my mind, the longer-term trend is not lower until we are below a flat to declining 40-week moving average, and that's going to take a lot of time for that to happen. So again, it's just foolish to try to look for the top. The NASDAQ for the week, closed at a weekly trading high, and the month of August closed at an all-time high. So this market remains strong. We pulled back slightly here today. What we'll be looking at in these markets next week is, since this event, the volume weighted average price from the Korean missile launch over Japan, that will, I think, end up being an important level to keep an eye on. These are levels I update every single day for subscribers to Alpha Trends. If you're just interested in market analysis, I do this every single day for, I think it's $150, I don't even know. But the anchored volume weighted average price, so you can see there, it's an Alpha Trends add-on that anyone gets on TC2000 here. But back to the NASDAQ, I think that this will be the likely area that we find support if we see a pullback. We'll also see that 5-day moving average rally up and catch it in that same area as well. The Russell 2000, I had pointed out a couple levels in here that had the potential to become resistance this week, and one was the declining 50-day moving average. But again, we look at the levels as a potential area of selling. We don't sell short there. We look at it, for instance, the volume weighted average price from this peak. It acted as resistance once before. We saw a nice rally off of these lows into that level, and I pointed out it had the potential to become resistance. Well, the very next day it gapped higher. There was no resistance in there. We want to be aware of the levels on this bigger time frames, and then look to participate on the shorter term time frames once there's evidence. In other words, you wouldn't have wanted to sell short because we had a rising 5-day moving average. And that told us the intermediate term trend, the buyers were still in control. It's not about just one time frame, it's about how they all work together. The semiconductors, of course, this market, this group also closed at a new high here today. I believe that's a new all-time high. It's actually not, but very close to it and good enough for government work. The weekly time frame, we did close at an all-time high. And again, when we have these moving averages still rising, a 10, 20, 30, and 40-week moving average, we look at the market from a longer-term perspective of innocent till proven guilty. On the daily time frame, we get cautious when it breaks below the 50-day moving average, but we certainly don't get bearish on that. Breaking the 50-day moving average is just a benchmark. It's something to look at and take it, look at the market more carefully and say, wait a minute, is the trend changing here? What would get that trend to change? And we had no evidence of that. Biotechs, again, great week for them. Looking at the weekly time frame, this market is just behaving the way it's supposed to. It pulled back to the prior band of resistance where we see all those moving averages, and that band of resistance is also where we see approximately the volume weighted average price off of the 2015 peak. We're in a stage 2 uptrend. This is what an uptrending market is supposed to do. And maybe it continues up like this, then expect pullbacks. Maybe it looks something like this, but it's in an uptrend. It's innocent until proven guilty. If you listen to my radio show, JC's radio show, that is, Technical Analysis Radio, this week I spoke to my friend JC Peretz of All Star Charts, and we spoke about some of these things. We spoke about Netflix setting up as a buy. The reason I was looking at that is we were looking for it to get back above the volume weighted average price from this gap lower, and that's where we got involved on the long side. We took some partial profits as it hit the volume weighted average price from the peak right over in here. So this volume weighted average price tool is an invaluable tool regardless of what your time frame. Today I pointed out that NTNX, I've spoken about NTNX a couple times because the volume weighted average price year to date, since the IPO, acted as resistance over here and here. Today the stock gapped up, and lo and behold, where did it find sellers? Pretty much right at that year-to-date volume weighted average price. The average participant, and there's programs, there's institutions that trade off of that. If you don't think so, think again is what I would tell you. I pointed out also that I think that John Deere has the potential to become a hurricane play. If you look at the way General Motors traded the last few days on expectations of new car and truck purchases, this stock rallied tremendously, and John Deere, a little bit different. I don't like the stocks that gap down like this, but when you look at where it gapped down to, it gapped down right to the rising 40-week or 200-day moving average. If you put a volume weighted average price on it from this gap and from year to date, you can see that those are both coming together in this same general area. So it's an area where it's supposed to find support. So what does that mean? Do we buy it? No. It means we look at a shorter term time frame and we say, okay, what about the volume weighted average price since this event? That is the gap lower on August 18th. Well, you can see we're fighting with that right now. I think next week you got to keep an eye on this. If it can get back above 116.75-ish, I think a worst case stop goes under here. My only concern is, of course, that this history of gaps with the stock, and maybe it has the ability to rally initially up to the volume weighted average price off that recent high. That would get it up near about 119.5. But overall, this stock is one that looks like, maybe it can get going. We did get involved in GNRC as a hurricane play. This stock has been holding the volume weighted average price year to date, I should say, fighting with it. We saw that it got above it over here and then back again a week and a half ago. And what we were looking at on that year to date volume weighted average price was we then looked down to a shorter term time frame and said, okay, it's at an important area. So when we looked at a 15-minute chart, what we noted was the volume weighted average price off this low and off this peak kind of came together, so we got involved as it got above above this level right here, with our stop just underneath that rising 5-day moving average. That's the way you want to put these time frames together. You use the bigger time frame to anticipate where it might make sense to take action, and then you drill down on the shorter term time frames for an area to get your analysis more precise. Hope you had a good week of trading, and enjoy your long weekend. Thanks for tuning in.